Okay, well, let's get rolling. Sorry for the technical difficulties. Just go ahead and expect more. This has come together really quickly, and there's a lot of content that the slide deck is the least of my concerns. What I'm more worried about is that we get this to you guys and you can put it into action, into business. So again, for those of you that don't know who I am, just so you understand who's on the other end of the line giving this advice, some of it might be contentious. I've been licensed. I came from law enforcement into real estate in 2005. I've been licensed in 4 different states. I built my career in whole ownership beachfront, ski front beachfront development, so multi-million dollar new construction developments. In 2008, when it hit the fan the last time, I decided to make myself nimble and transition from a salesperson to a capital raiser. I went and raised enough money to backstop 2 projects, one in Smoky Mountains in Tennessee and another one in Kaanapali Beach in Maui. The total value of those resorts, like what we had pre-sold when the banks ran away and took our funding with them, was right at $1 billion. So and I was well in the eye of the storm all through 2008, 2009, and I had the opportunity to work with literally hundreds of self-made millionaires and billionaires who had put money down in 2006, 2007, when everything was good, and all of a sudden they found themselves with their lines of credit frozen, no liquidity, 10, $15 million on a balance sheet, and they couldn't close, and the 20% down payment they had was cash that they needed for dry powder because everything was crashing down around them. So I learned a ton from that. I made a lot of promises to myself then that what I didn't understand I would the next time, and I've filled in, I think, most of those blind spots. So this isn't the first crisis I've been in real estate, and there were just a lot more zeros attached to it last time I was through this, and I was able to learn from just observing behavior, but also a lot of really vulnerable conversations with some super successful people. And then once I watched what they went through, I educated myself and learned to build in an environment like that. So I took the better part of a year between 2011 and 12. I spent a lot of time camping and fly fishing and riding motorcycles and just figuring out who Chad was. But when I finally decided to re-engage with real life, I started investing in Roanoke, Virginia, a market where I knew nobody. This market was still basically at a standstill at that time. And that led me to a lot of creative financing strategies. I did a lot with lease options, owner financing, land trust, subject to wholesaling. Eventually, probate kind of rose to the top as what I saw as one of the biggest opportunities in the space. And that's, where I kind of became the probate expert was right here in Roanoke. And I ended up building a real estate team, flipping houses, shutting down a real estate team, shutting down a house flipping business. I've had some rentals. I've realized I'm not a landlord. I've represented off market sales and the hundreds and hundreds of units to landlords, and currently involved in before all of this happened. I'm currently involved in $28 million worth of letters of intent between Nashville and Norfolk in 2 different markets for multifamily housing. So I'm quite well versed in the spectrum of real estate. I feel like I'm probably qualified to be here. I'm sure there are people on the phone smarter than me, but my intent here is to try to give you guys anything I can from my perspective that might just trigger that aha moment that might help you set your business up to not only to stay alive through a time like this, but to actually thrive and to have one of your best years ever. That's not supposed to be there. I used that. That's from Probate Mastery. I was using it. I was stealing the animations. Um, so what to expect from this series? So we're going to do a series. I'm not sure exactly how many right now. Um, Jim Forsyth, I just saw your question. I'll unmute you. We'll have a Q&A at the end of this. So what to expect? I mean, we pulled this together in days, guys. So there's going to be some hiccups along the way. Um, within a few, it's amazing how quickly things are changing, but within a few days, I think we've all taken steps to, get extra food reserves, prepare ourselves, prepare our families. David Pinnell, I'm sure he's got some interesting stories. He had a baby during the middle of all this. But now it's really time to, your family's likely cared for, and hope maybe you've already made moves to prepare your business. But just like you prepared your personal life, let's do that in your business. And probate is a really unique niche. It's something that regardless of what the market is doing, these assets will come through. Now, market conditions do dictate the level of motivation. But we talk about probate a lot. We have our mastermind call every Thursday at 1 p.m. We have the role play call coming up. So this is not going to be a probate specific call, because I think that that's cheating you guys out of a lot of other more important conversation, and we can always find our way to probate during Q&A, I'm sure. Keep in mind a lot of the things that are on here. I try to stay well informed. I've been on mastermind calls till 10 o'clock to midnight almost every night since this started to happen, and with some very successful people, most of them in real estate, most of them just like us, trying to get a read on this. What's it going to be? What's our best move? We know there's tons and tons and tons of opportunity, and we're still looking for that. So as this training goes on, as these sessions continue, something that I say today might be invalid tomorrow based on a policy that's written or another trigger that's pulled by the Federal Reserve or by HUD or whomever that might be. So just keep in mind, these are recorded, these are archived, and this is a very dynamic environment, and we're all trying to figure out which way's up. I'm going to give you my best read on it right now, but in any moment that could change. So just some ground rules for this. This is a little outside of what we ordinarily do, but just, in addition to what I just said, we've got to make some assumptions. So I'm not here to debate. I'm not here to be political. I'm not here to tell you that I'm right. I'm here to give you my best read on it and to help you in any way I can. And if you don't like the advice I give, you don't like my assumptions, that's fine. But you keep it to yourself or keep it in a private chat. This isn't a place for poison pen armchair quarterbacks, and we don't have that culture in our group. I just want to make sure this is going live, and there's a lot of people that will be listening to this. I'm not looking to debate or defend my position. I'm here to help and give everything I can give, and hopefully you're here to receive and not. I've unfortunately seen some behavior in the last week that it was really unexpected from some people that I used to respect, and people attacking each other and the side panel of a Zoom is just uncalled for. So I just want to be clear here. Nobody has a crystal ball. I don't know everything. I'm doing my best. And if I see people dragging each other through the mud in chat, your ass is done. You're out. And that pretty much covers the next bullet point. So the idea here is to make this an interactive training. It's really difficult if I unmute everybody. We could be here for days on the conversation. So what I'm going to do is leave everybody muted like we do on Probate Mastery. We'll roll through, and then I'll open up a Q&A, and we'll stay until we clear the queue. And again, this isn't a probate specific call like most of our calls. We have 700 hours of probate specific content, role plays, masterminds, where our team just gets together and we help everybody from across the country. So if you're here if you have very specific probate questions, remember our weekly mastermind call is tomorrow, and there's a whole lot of archive content that you can refer to. And lastly, pretty much you guys are going to dictate the direction of this and where it goes and how long it goes. As long as you guys need us to do these, I'm committed to doing them. I have laid out what I think is the most, relevant content right now, but I'm going to be looking to you, like once we finish these sessions, if you want to drop a ticket to support or if you want to send us an email, I'm open to ideas. If there's anything, if you're like, hey, I really don't understand what you were saying about this, can we dig in a little deeper on that? Or you haven't talked about this at all, what's your read on that? So as far as outside of these first 3 or 4 sessions, I have a pretty clear roadmap, but from there, the intent is just to kind of switch gears and really focus on and go macro to micro, and then focus in on what it is you guys need the most in the moment. So even this training is going to be a little bit dynamic. I don't even know what it looks like a week from now or 2 weeks from now. I've got a pretty good idea right now. All right. Thank you guys for all your comments. I think we covered most of these. We're going to be, we'll go to Q&A once we get through the slide deck here. So let's look at the U.S. housing market coming into this. That's kind of an outline of what we're going to cover today. This is going to be broken into pieces. This will just be broad strokes of what we'll go through today. So what did the market look like before this? What are some of the possible implications and outcomes of what we're going through? How do you prepare your business to get through that, including your mindset, your education, finance, operations, looking at your buyer business and then seller business. And each of these will obviously be expanded, but over the course of what we know, what's already laid out, this is what our outline, the broad strokes are. Today, what we're going to focus on is we're going to look at the pre-market conditions, look at the possible outcomes, and we're going to talk about preparation of mindset, education, and finance. Tomorrow, we're going to dig into operations and look at it from, more of the micro standpoint. So what do you do if a buyer is doing this or a seller is doing this? We'll get more specific. So today's going to be more high level. The facts that are pretty clear, I think, to everybody at this point is we have a virus, whether you call it, whatever you call it, there's a virus against us. It doesn't have any diarrhea symptoms, but it's certainly a pain in the ass for all of us, I think. And something that, the only one of the silver linings in this is everybody in the world has to go through it together. It's not an isolated event that's just happening to our economy and our people. There's plenty of post articles, newscasts, live tasks, whatever it is. I'm not going to try to get into any of the political side of this. I'm looking at this with more of an economic analyst brain, and trying to forecast, what are the best moves? Where's the opportunity? I think at this point you realize, like anyone on this call, your business is going to be impacted. And it's probably going to be, in the short term, it's going to be negatively impacted, depending on how you react to that and how well you educate yourself and what your mindset is throughout this. As the pressure gets higher and higher, it could be a great positive impact. If you keep a cool head and you educate yourself and you become a leader, you can have a great story to tell here, and you will grow from this, and you will be stronger and richer. If you let off the gas and you become complacent, you probably won't be in the industry. So you've got some options, and I'd like for you to make your mind up now. As far as I can see it, you can quit now and spend the spring or summer educating yourself to go into your new career. You can not quit, but just become complacent. Like I said, you can spend the rest of the year trying to figure out who moved your cheese, where it is, and how to make money. Or you can commit right now that you're going to not only survive, but thrive in this, and you're going to get your business in a position to benefit. Warren Buffett is famously known for saying you should buy when there's blood in the streets. When everyone else is running away, you should run in. And when everyone else is running in, you should be selling everything you own and running away. And Buffett has got a lot of pressure from his board for the last year. He's been sitting in cash, been called an idiot. He's looking pretty smart right now. He's got a lot of dry powder. So if you can commit to educating yourself to one of the, like a value of into a value economy mindset, you can find a lot of prosperity in this, and you can help a lot of people along the way and get paid for that. So hopefully everybody chose option C. I didn't see too many people jump off the call, so that's a good thing so far. So the current state of the market coming into this, we have a pretty healthy real estate market. It's, there's certain aspects, certain cities. And keep in mind, I'm looking at the market as a whole, the entire United States. When you narrow this to the top 10 MSAs, obviously the stats are a little different, but as a whole, we serve all 3,149 counties. So I look at this at a national level, but across the country, we have about a 3-month supply of inventory. What is very, very much different than in 2008 is 37% of homeowners right now in the United States own the assets free and clear, and 1 in 4 have at least 25% equity. So we deleveraged from 2008 through about 2012. We had a massive deleveraging event in single family. And because of Dodd-Frank and other restrictions that were put into place, we came out of that and still have maintained a pretty healthy lending environment. So from a debt standpoint, real estate is looking a hell of a lot better than most other industries. Like if you look at that we have, coming into this, we had $14.2 trillion in corporate debt sitting on balance sheets because of the currency expansion. Companies are in way worse shape than houses this time. So the good news is, like, there's strength in the supply demand economics of housing. There's a lot of comfort there. One of the things I am seeing is a lot of sellers are pulling listings because they have health concerns for their family. So they have to be there. They're captive in their home, even if your state hasn't made a move to lock down and you can still show homes. I'm seeing a lot of sellers actually pull their homes from the market. The other thing I'm seeing is mainly, business owners and people who are looking for liquidity. What's really interesting, in most markets, you see a healthy listing inventory similar to last year. There's some, like my friend Bruce Hill. I'm not sure if Bruce is on this call, but he's done a great job of pulling stats for the Raleigh Triangle, the Triad in North Carolina. They are actually seeing month over month, year over year swing, like massive increases in the number of homes hitting the market. And that's not that alarming because they're also seeing a massive increase in buyer activity month over month and year over year. And this is, it's just as recent as 3 days ago that he shared these statistics. So we're seeing some sellers get apprehensive and pull off the market. We're seeing a lot of others come in to fill that. And there's, in most markets, there's still a pretty strong buyer presence. Which takes us to demand. So we've got roughly 1 million new homes, or excuse me, 1 million new households being established at the current pace right now in the United States, according to the demographics I've studied. We've got roughly 1 million new homes being built. But the unfortunate part is because of the price inflation that we experienced as a result of the money printed in 2008, building costs have gone through the roof. So affordable housing has become a big issue. We're not building enough homes, and the ones we are building, we can't paper affordable housing for developers anymore because of land costs, construction costs. And in addition to that, we've got 300,000 to 400,000 that are demolished either through intentional demolition or through natural disasters. So we've had we've had increased development since 2008. We've done our best to get that back online, but we're still roughly 6 million housing units short in the United States, and we're losing ground by about 400,000 annually right now. I expect, because of the levers that were pulled this in the last 10 days by the Federal Reserve, if you don't understand what this means, it's kind of outside of the scope of this training, but the inflation that you've seen that drove up prices and like kind of created the challenge that we have in housing now, I think it's going to get worse. We put more liquidity into the markets. So as long as you're holding real estate, you're fine. If you're looking to build real estate and or your income isn't growing, that's where inflation becomes a problem. But I think you're going to see the housing crisis, the biggest problems in housing, like rent affordability. That's going to be a bigger problem. But from an ownership standpoint, if you look at right now, at the end of 2019, according to NAR, the home ownership affordability index, so the average homeowner is only spending 16% of their income on housing, which I say bravo, America, because it was a lot different in 2007, and that perpetuated the problem we had. Unfortunately, the rental affordability index is really an unhealthy territory. So 1 in 4 Americans are currently spending more than 50% of their income on rent. And I think the average is about 35% of your income. So it's not exactly sustainable, especially if unemployment rips through the younger generations. Then all of a sudden, it becomes a worse problem. But from the demand side, you've got limited supply, growing demand, and you're going to see upward pressure on prices that should maintain a healthy market. Now, we still have to see when we bring our economy back online, what the real unemployment rate is, and what an actual mortgage forbearance or a foreclosure forbearance, mortgage forbearance or rent forbearance, and how they're going to deal with that in the court systems. Like, what does a default look like in the new economy? We'll see how that affects demand. But right now, from what I can see coming into this and being in it already, it's I think we have really strong fundamentals in housing, and it won't look like it did in 2008. Financing. So we're seeing rates, and this is like here in Roanoke, like real rates right now are 3.5 to 3.25 on a 30-year fixed. I've seen a lot of misinformation and a lot of people, being quite harsh to each other about this. But as you know, one of the first moves the Federal Reserve made was to drop the Fed funds rate to zero to a quarter. And everybody expected that to come, rippling through residential mortgages and buyers to flock in. And it's just not quite how it works. What was really interesting is, so the mortgage rates are tied to what you'll find is that the more modern and better, quite honestly, better governed municipalities, counties, and states, they will very quickly, if they don't have e-settlements in place, I think you'll see that will be one of the innovations, one of the other silver linings that come from this, is there's going to be a huge motivation to get some of this technology in place that we probably should have had in place already. So it looks like, the market's not going to freeze. We'll still be able to handle settlements. There are a few people that I know that have not been able to record, and there's uncertain on when they will be able to. But the good news right now is that's fairly limited, and it's not. It's an exception, not the case for most of us. So the possible outcomes to consider, and this is heavily my opinion, but I'll share it. You take it for what it's worth. If the virus is not going to hit us as expected by most medical professionals, and I'm not talking about people on beaches drinking and making out, they expect one thing: the smartest leaders in our world, the smartest economists, the smartest medical professionals are taking this extremely seriously. I wasn't. 3 weeks ago, I was more focused on moving forward, and I'm like, yeah, it's no big deal. It's just a pandemic. When major governments started to make moves, when India very quickly moved to shut their border, that I knew what that meant. I've been there. I've seen the poverty levels, and to completely lock down a country like that, when a government in a developing economy is that quick to make a decision, that made me pay attention. So according to the most, the savviest people in the world, the best informed people in the world, this is happening, and this is going to be a problem. And globally, governments made a choice to preserve life over economy, and that's what we have to live with. That's the slippery slope that we stepped onto, and we all did it together. But the best case scenario here is that we all over anticipated the impact that this might have. The virus doesn't hit, and it's over in a month. If that's the case, real estate will have a little bit of a blip. It'll move forward. Closings will happen. Supply and demand will hold up the values just like we looked at. And we'll move into our careers with lower interest rates and a lot more liquidity in our banking system. And we just know that we have to deal with more inflation. If this ends up being the case, you still need to work really hard to keep your current clients and your current deals in the pipeline. Like, keep them in escrow, keep them calm, keep them moving forward, find any encouragement you can give them along the way. And you need to be thinking about your pipeline. Once the one thing that there's real estate for, especially in brokerage, but I see this with investors too. It's, you get your marketing out the door, the phones blow up, you get all these deals, and then you forget to do marketing and you're not on the phones, and then it happens again. And so real estate in general tends to be a roller coaster until you get to a certain point where you stabilize and you run your business like a business. So as you're working so hard to keep your deals in escrow, don't forget about your pipeline. Don't forget you need money in June, July, August, September. And especially in a time like this where there's so much going on and so much distraction, you've got to remember to focus and just like everyone's saying, flatten the curve. Think about that in your business. You have peaks and valleys. If you do business like most real estate professionals, flatten the curve. Like, find a way to keep that pipeline full and focus on that as much as you are and keeping what you have. See, here's one of those formatting mistakes I was afraid of. The likely scenario is this will take 4 to 6 weeks from the time it started. We're already into that, and you'll see a peak somewhere between mid-May and mid-June, and then we'll be allowed to go back out into the playground and reestablish our careers and move forward. But this is going to put a lot of pressure on the healthcare system, and the government has proven they're willing to basically lock down and do what's necessary so that pressure is relieved from the healthcare system. It's interesting to me, the federal government has kind of let states handle this, and states like New York and California have made swift moves, and others have, still have people moving around freely. I think that's the only thing that's going to do is prolong this. And it's, explained this to somebody yesterday. It feels like, I've been home for 2 weeks, like focused on doing what I can do to help and be a part of the solution. But I feel like the kid in class that like the teacher's already mad. She's taking a day of recess every time somebody talks, and the two guys in the back just won't shut up. And we're losing day of recess every time they talk. And it's like, just shut up, like just go home like the rest of us. But as long as this is still spreading, I think the government is they're going to hold their decision they made to, control the flow of people and try to make this as as the least loss of human life as possible. So I think what's most likely here is based on decisions that have already been made, not based on any kind of assumptions from me. If you somehow have missed the amount of money that is the liquidity that has been injected into our system, and the amount of businesses that have been taken offline, and the amount of debt they were carrying before they were taken offline, there are far-reaching economic impacts. This is going to put us into a recession. And just the pissing match between Saudi Arabia and Russia and OPEC right now, that alone would have been enough to be the pinprick that popped the bubble. The amount of debt in that is unbelievable, and they're there to play the long game. So don't fool yourself in thinking that we're just going to flip a switch and go back to what we were doing, because what you're seeing is a long-term debt cycle trying to correct. And we tried to manipulate our way out of that in 2008 through quantitative easing, and it worked to an extent. And that's the path we've chosen here too. But it's not going to be like flipping a switch. Not everybody's coming back to work. Not every business will survive this. And you've got to understand what are the economics of that, and how does that affect the buyers and sellers that I work with and the homes that I'm looking at buying or wholesaling or whatever it is. So I think the most likely scenario is you will see a negative economic impact. The difference here compared to other crashes is it came on way faster. It's a really different environment than what we saw in 2001, 2008, ever. What triggered this was very unexpected. Some of the smartest people in the world didn't see it coming, and some of the hedge funds, they lost billions of dollars before they could get out. So it was a surprise. But because it came on so quickly, and because the government made such swift and massive economic moves, we should see more of a V pattern. So it's not going to be that slow crawl that, we're going to take 2 or 3 years to come out of this. You should see a V pattern, and we'll come out of it quicker. So rather than being in a depression and long term, downturn and everything, I think what you'll see is that liquidity is going to take a while to settle out in the markets, and we all have to figure out which way's up and what you can do with it and what that looks like. What are the implications, and what are asset values in this environment if you can't evict somebody? But once we see that, there is the amount of cash that is sitting on the sidelines is just unbelievable. And some of the smartest people I know have sold everything and just been sitting waiting, and they don't know if it's stocks or real estate or what's going to be the trigger, but they knew there was a buying opportunity coming, and that cash will rush back in, because we'll probably never see a buying opportunity like this in our life ever again. So a lot of people are taking their positions, selling everything they own, pulling lines of credit, getting in a position to buy every piece of real estate they can get their hands on: single family, multifamily, mobile home, self-storage, probably everything but office and retail. I think they're going to take it on the chin pretty hard. You're going to see unemployment high for a while. Maybe it'll be a few weeks, maybe it'll be a few months, maybe it'll be a few years. But we just flipped every business in the United States on its head. And other than healthcare, and a big section of that industry is even flipped on its head. But you're going to see it's going to take a while to figure out what that looks like. How many of them, like, what happens to their debt service? Do they get a forbearance too? Are they going to get an SBA loan to help make their payroll? And is that going to be forgiven, or is that going to put a load on the business that might take them down 6 months or 8 months or 10 months from now? There's a lot of uncertainty there, and there's no way to tell. But I think one of the things that is certain is you're going to see higher than normal, and potentially higher than 2008 unemployment. And that is really the biggest risk to us in real estate. We have the supply, we have the demand in good condition, but the unemployment is the issue that can really hurt most of us from a residential standpoint. So How do you, and we're going to talk about some strategies that you can use. Like what, if you, I'll plant a seed right now. If you're in a high unemployment atmosphere, but you have entrepreneurial people who obviously can make payments, they can afford to buy a home, but they don't meet lenders' underwriting standards. What do you do? How do you make money in that environment? Creative financing, right? And that's some of the things we're going to talk about. So I'm not just here to point out a bunch of problems and say, you guys, look at this, look how bad this is. I'm going to try to give you a solution for everything that I'm shining the every negative aspect that I'm highlighting. I think I'm prepared to show you exactly how to benefit from that, how to manage that, and how to move forward without getting hurt. Eventually you're going to see mortgage rates will settle out and they'll come back down once they get back in line with where how they normally behave, and that's going to help you stabilize it'll help all of our clients stabilize property values. It'll give buyers the comfort to rush back in with all that cash and lendability, and then we'll see things explode. And in a few years, you're going to be shocked at what asset prices trade at. Just because of the amount of liquidity we've put into the system. I mean, you're going to see median home prices will explode. I'm not sure when that will happen. There's some policy that has to be written and reviewed before I can really make any predictions on whether that's 6 months from now or 6 years from now. But with the amount of money we just put in, like you're going to, like, the next car you buy is likely to be, if it's a luxury car, it's likely to be 6 digits just because of what we put in. And hopefully we see our pay rise too. I think we will. The worst case scenario, is you buy a mule and a plow, go buy some wheat and plant your front yard, get ready for the worst. But I don't really need to talk about this. This is a strong country with strong economics and strong, innovative people. There's a lot of worst case scenarios out there. I really don't think it's worth spending a hell of a lot of time on, because we're going to make it through this. We're here to talk about how we're going to get through this and prosper. So how to prepare and mindset, I think, is probably one of the most important things. I'll give you guys, this is some very personal advice. I'll take off my all the leads hat. I think that you've got at least another 30 days of this where it's going to continue to get a little bit worse each day. People are going to be a little bit more panicked, your peers, your family, and you have to make a choice. And trust me, I'm not immune to this. I got into a position last Thursday. I've always asked people what anxiety is like what does it feel like to them? And I've coached a lot of people and had a lot of conversations that's just negative, 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 negative from like 7, 8 in the morning until midnight every night. I've been on the phones with super successful people who are just in dark places. And eventually that started to hang on me. And it was almost like each person was coming by, putting their fur coat on me. And eventually I had so many damn fur coats on, I just kind of stopped. And I'm like, oh, and I felt horrible. And I had to make a decision. I normally don't go to bed before midnight, but I went to bed at, I think, 7:30. And I'm like, you got to get some sleep and clear your head. And like, you can't be a good leader if you're letting everyone else's shit hang on you. And so I encourage you to do the same. Like, you've got to work on your mindset. You have to be mentally healthy. If your cup isn't full, what good are you to anyone else? Like, until your cup is full, until your mask is on, don't worry about helping other people. So you've got to look at this and say, I'm making a choice now. I'm going to persevere through this, whatever it is. Even if Chad's completely wrong about his negative predictions, by God, I'll be ready, right? And commit to finding opportunity in this. There's always a silver lining. And I would encourage you, just like I said in the beginning of this call, this isn't an environment for anyone whose their values don't match the majority of the people on this call, meaning they're positive, they're contributors, they're generous, like people that want to help people move forward. And there's a lot of stuff out there right now where everybody's like using fear tactics and they're just focused on negative, 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 but they don't offer any solution to anybody. And so just be careful who you allow to be an influencer, including me. Like, be careful that my values fit yours and you think that I'm somebody that actually is worthy of giving advice. But be careful what you listen to, because that greatly influences your mindset, and your mindset influences your behavior, and your behavior ultimately influences your income and your livelihood. So if you're just pouring poison into your mind all day through all sensory, avenues, you can't expect a hell of a lot. So you got to keep yourself healthy, both physically and mentally, if you really want to be operating at a high level, and be on the point of the spear here. My last piece of advice on that is no matter which outcome it is, if it's something completely different, always have like a number one most important priority for your business that you can focus on. So no matter how bad this gets, or who comes in saying what, that you can always say, okay, I've got to recenter, and you can get back to that. So you can choose it now. You can choose it after this session. You can choose it tonight when you're getting, shutting down. But what is your number one priority in business right now that you can see, that's within reach, that you focus on? And when you achieve that one, you need to set another one. And anytime you find yourself deviating from that, if you're doing anything else, that's when it's time to kind of pinch yourself and say, okay, whoa, got to change my state and get back on this. What is my number one priority? What am I doing to move the ball down the field? Next is education. So this is important. It's not the most important thing because it takes more time, but as this starts to happen, you certainly want to be moving in this direction. So real estate professionals with the most knowledge always end up leading the way. And whether it's sellers or buyers, there's going to be a lot of uncertainty, a lot of anxiety, a lot of nervousness. And those where they can find leadership is where they're going to be attracted to. That's what they want. So the leaders in this will get the business, and they will come out of this as the industry leaders. What you're going to find is the people that have been on YouTube, the people who think they're leaders and influencers, that weren't providing real leadership and real value. It was more that me, look at me, buy my course, listen to me, watch me. I'm a hot shit. Look at my logo. You're going to see some of those guys. You're going to realize who the leaders are, and you're going to see some of them fall back in the herd and get really quiet. It happened last time. It's already happening this time. So those, if you educate yourself and you're providing real value in the community, regardless of what the conditions are, what the prices are, when you provide real value in the world, you get paid. That's called business. It's called commerce. So what is it that you should know coming into this to be most prepared? A situational knowledge. If you don't understand everything that I've talked about, I'm trying not to geek out too much on you guys, but if you understand how the federal, state, and local restrictions are and can impact your business, you need to be aware of that. You need to have that situational knowledge. How does the stimulus details, like, so the stimulus meaning the levers have already been pulled, but the ones that are being argued out right now as we speak, how does that translate into your life? What are the benefits? What are the risks for your personal life and your business life? That's situational knowledge you need. Like, understanding residential interest rates. So many realtors are out there telling people to go refinance when the damn rates went up, and the lenders are choked with refi applications that they know they're not going to do. So they're focused on purchase applications. And just like healthcare, we took drastic action to make sure we didn't choke out the hospitals and to flatten the curve. And in real estate, we've seen a very similar wave. Like, a lot of people went out there and spread bad information and called all their clients and said, rates just went to zero, refinance. Lenders got absolutely choked with refi applications, which affected their ability to underwrite purchase applications or process purchase applications. And eventually, like most of the lenders I know, they just kind of swept the refis off their desk, and they're like, the hell with it. We're focusing on purchases. So understand interest rates especially before you go give your clients advice. Make sure you understand it. Make sure you understand underwriting standards within, let's just say, your top 3 lenders that you do business with. You should know their underwriters. If you don't know their underwriters, you should know exactly what their underwriting standards are, how that process works, how they look at credit, how they look at employment, how they do verification, how they look at debt to income ratio, what their debt to income ratio thresholds are, what overlays they're using. If you don't know that stuff, you should, because when you can think on your feet in an environment like this, there's so many buyers that were told by other lenders they couldn't qualify, And then a few months later, they came to my business looking for a rent to own or a lease option. And I would take them over and I'm like, well, I've got 10 questions for you. And once I asked those 10 questions, I'm like, no, because I knew what you could get with a 620 credit score and a certain debt to income ratio. I knew the difference. I knew the underwriting standards for USDA, VA, FHA, VHDA, all the different conventional. Like I understood these things, so I was able to take buyers who other realtors were turning away, saying, "Oh, you got rejected for a loan app? Okay, well, call me back when you're ready." And they were literally being turned away by realtors, so they came to me, but thinking they needed rent to own. I don't put anyone in a lease option unless they absolutely have to have it. So through that just simple interview, I was able to quickly figure out exactly which loan product would work for them and get them to that lender. And that you should, the smiles on their faces, like I would usually this would happen over the phone. And then I forced every buyer to meet me for a 1 hour consultation in person before we ever looked at anything. And the gratitude and happiness on people's faces, because they had been told, no, 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 get your credit up, get your debt down, this and that. And there were government-backed lending programs that they qualified for in that moment. And why that lender didn't tell them, I don't know. Why those realtors didn't know that, I don't know. But I'm going to tell you, I created a ton of deals. The very first probate deal I did, which was also the first lease option deal, I just made it all up on the spot, and I'll teach you how to do that. But I ended up with 4 buyers. All 4 applied. They had $8,000 down payments, and they all wanted to do lease with option to purchase. Within 60 days, I had 3 conventional closings and I had a lease option tenant. I turned all 4 of them into buyers. 3 out of 4 were ready to buy, but didn't know it because all the realtors were telling them they weren't. So understand these loan products, the underwriting standards, and what it takes, and become that leader. Become the one that says, all right, Mr. Buyer, let me ask you a few questions and let's just see if you qualify. And I was, this is in 2012 when things weren't moving great here. I was able to find buyers like crazy because so many people had lost faith and they were going for rent to own and lease option. And the vast majority of my leads from that strategy turned into conventional buyers. And they moved quickly because they went from having 1 or 2 houses to look at to having everything on MLS. So that like they were just, it was like it was like the difference in shopping, this week when there's like 1 loaf of bread and you can't find eggs in a 50-mile radius versus 3 weeks ago where you could buy whatever you want. So they were just thrilled when they could actually buy a home conventionally, and it made a lot more financial sense. So the better you can understand what's happening with your lenders programs and with their underwriting standards and what that means for your buyers and sellers going forward, the better of a leader you'll be and the more transactions you'll find and will create out of thin air. Market stats. So I would encourage you to go pull 2 years worth of data and start looking at year over year, month over month analysis and understand what's happening. And you should probably do this on no less than a weekly basis. If you really want to geek out, do it on a daily basis. But you should understand how to read that trend, what is happening. And the first one to know about the trend is the first one that can start to react to it and benefit from it. You can sit around and act like it's not happening, or you can be the first one to know about it and take action early. Supply demand economics. Like if you don't understand that, if you don't have a general understanding of just how supply and demand works and how inflation and credit works, I'll try to create a PDF with some of the sources that I think will be valuable to you guys. But Ray Dalio did a video, I think it was last year, on how the economy works. I think was the name of it. But if you look on YouTube, Ray Dalio, then search like how the economy works, how credit works. It's a little like one of those hand-drawn videos, and he did a phenomenal job. Ray Dalio is one of the most successful hedge fund managers ever. So it's a really, really great summary. In 30 minutes or less, you can learn macroeconomics at a pretty high level. But you need to understand how that supply and demand works in order to talk intelligently, to make people feel comfortable when there's uncertainty and they're not moving, sitting there, letting them stay in control. Just like in probate, you hear me talk about probate quicksand. what you're going to see is seller quicksand and buyer quicksand. And you need to be influential. And yeah, Bill Gross found the Ray Dalio link already. Awesome. Thank you, Bill. But the better educated you are from a financial standpoint, the better of a leader you will be, and the more confidence you can instill in your buyers and sellers. So make sure you understand this. And it's kind of like there's no looking back. Like once you understand it, you're going to find some things that really upset you about how the world really works. But it's important that you understand that if you really want to be taken seriously and you want to shine above your peers, understand how to motivate people based on what the real economics, and whether it's today or 3 weeks from now you're having this conversation, the better you understand what's going on, the better you can help your clients navigate that. And then you need to understand the real estate strategies that are very effective in shifting markets. So option to purchase contracts, short sales, subject to, lease with option to purchase, owner financing, and how to raise private capital. Now, I'll kind of rely on you guys in Q&A to teach each of these. Each of the bullet points I just put out is probably a 4 to 6 hour course at a minimum. So I'm a little bit uncertain on how to do this. Maybe that's something that once we get through the macro of this, we can next week, and when we do these sessions, we can just start to pick these off one at a time. Option contracts right now in an uncertain environment, we don't know when you can get title. We don't know when you can get an appraisal. We don't know if we can actually record. We don't know a lot of things. We don't know how long it takes the lender to close, and no one else knows either. So if you've got a deal that you're like, man, I can't let this get away, but I don't want to go to a purchase agreement and lose my earnest money, what can you do? Go to an option contract, put an option on it, and put in language about a future, set a future date that your option will expire and you can exercise at any time. So you're gaining full control of a piece of real estate for free. Now, if you can't record that option, you've got some risk. So you should have it notarized, because if you can't go record it against the title, then you don't really have any protection. They could be signing contracts with other people. So just make sure that if you're doing option agreements, that you have it notarized and witnessed. That way, if they were to go sell it to someone else, you'll have a valid enforceable option contract, and they'll have to buy you out even if they do have a purchase agreement. And I've actually been paid to not exercise my options before. I think I've made like $4,000 that way on 2 different deals. I was paid $2,000 to release my option. I did nothing. All I did was put an option on a piece of property. Another guy came in behind me, offered more money, and he was willing to offer more money to the seller and $2,000 to get me out of the option. So you can gain control in uncertain environments. Options are really awesome ways to gain control. Short sales, it's hard to tell what this is going to look like right now. Banks aren't moving to foreclosure. FHA, Fannie, Freddie, and I think Bank of America for sure have put a 60-day forbearance in place. What's being discussed is anywhere from a 3-month to a 12-month forbearance. So short sales might be something that you'll deal with in the next quarter. Probably not. We'll probably see those assets start to work their way through probably in late, like in the fourth quarter of 2020 and in the beginning and throughout 2021, you're going to see short sales. So it's certainly something you want to educate yourself on. I will let some cats out of the bags here. We've been waiting to release our pre-foreclosure foreclosure short sale program. Everything we do in probate can be done in this space. So you reach out to focus on people and situation, not real estate. You offer real options, ranging from saving the house to getting the house sold to short selling the house. Same thing in probate. We build a team around us to help with any situation. We offer multiple options. We allow them to make a choice. And if it ends up being a short sale, we will actually negotiate that for you. And I'll show you exactly how to train the real estate agents, how to do everything on your side. So it literally becomes almost autopilot short sale processing. And you get to keep 100% of the negotiate our pay on our end. So not only will we give you the leads, the education, and a system, we'll do the really technical hard work. We'll do some of that for you. So that's where it looks a little different than probate. So we'll talk more about that in the future, I'm sure. Subject to, and for anyone who doesn't know what that is, you can buy a piece of real estate subject to the existing lien remaining in place. Now, there's a certain amount of risk that comes with this. The main risk being that if the lender finds out and they trigger the transfer on sale, the due on sale clause, then they can actually call the note and you have 30 days to come up with a refi solution, or they can foreclose and you lose what equity you put into the deal. So you need to understand subject to, but it can be very useful in times like this when people can't make their mortgage payments, but they haven't defaulted. And their only option is that they just want to walk away, put their head in the sand and say the heck with it. They will basically give you their house and the equity that comes with it if you just take over the payments. So think about it. You see this is common in the auto world. Like you'll see people advertising cars and boats and RV. It's like, just take over the payments, and they literally will hand you a payment book and you just write the payments for them. You're taking an RV subject to the existing financing remaining in place. You can do the same thing with a house. You can get a free house and all the equity that that house has in it, because people are so mentally and emotionally exhausted, they're willing to just walk away. And you're basically borrowing their credit. Now, again, I would love to go long form on these, but we just can't. This is something I can come back to, but what I'll leave you with, and this is, I'll take my all the leads hat off again. This is Chad talking to you. Based on my personal values, you should never wholesale a subject to deal. If you make a commitment to a seller that you're going to borrow their credit, then you damn well better do what you said. And I know a lot of people disagree with me. I don't care. If you make that commitment to that person, you need to live up to it. So you can go refinance the deal, you can go do whatever you want, but don't wholesale a subject to, because what happens when that person had a trust and faith and that you would do what you said, you go wholesale that guy defaults and quits making the payments, and then the original seller is the one that suffers the credit loss. So not only do they give up their house and their equity, they trusted you to manage their credit score, and you just let them down on that. So you can't ever be sure that won't happen. But my advice to you is subject to is an amazing tool, but don't use it and like, be empathetic to the seller's position. They're in a tough place. They're making a tough decision and a tough concession. So respect that, and don't just willy-nilly go sell these to anyone that can fog a mirror. If you're getting in sub 2, you better be the one paying it off or refinancing it or finding another way to make sure you're not passing the risk on. Off my soapbox. I'll put my all leads hat back on. All right. Lease with option to purchase. This is commonly called a lease option or rent to own from a marketing standpoint, but it is technically a lease with an option to purchase. That should always be a separate document. You will get your butt handed to you in a courtroom if you have an option as part of a lease, because anyway, don't do it. Make sure you have a lease and make sure you have an entirely separate document that is an option to purchase. I have a system for this that had a 95% success rate nationwide. It's a 15% success rate, even with one of the biggest hedge funds in the world that are now playing in this space under a different brand. They're only maintaining a 15% close rate. The reason I had a 95% close rate is because, remember what I told you about being educated on underwriting standards and loan products. I brought the lenders into I was the hub and spoke concept, like that wheel metaphor that we use so often in probate. I saw myself as the hub in the middle, and I had lenders, I had appraisers, I had home inspectors. I was surrounded by other people that had a lot more knowledge than I did, and I just kind of became the hub and held it all together. The tenant buyer, the seller, the title company, the lender, the credit repair company, the appraisers, the home inspectors, the attorneys who were writing up the agreements. And I was just the coordinator. I was the hub in the middle, being the transaction engineer. And this one's quite complex to unpack. I would almost certainly need to give you a slide deck to even show you how to do this. The basics of it is, when somebody has limited equity, they just can't get out. If their credit is frozen and you can't sell a house right now, you can take an option fee, not a deposit. It's never a deposit. It's always a fee. It's non-refundable if they don't do what they say. So you take an option fee, you set a market rent, or sometimes even slightly higher than market rent. And when and you establish a price and you negotiate out all the terms of the contract, purchase price, closing date, not the specific date, but the timeline, whether contingencies, inspections. And for me, one of the reasons I tried to mitigate as much risk as possible on both sides. A lot of people just focus on the seller side because that's them. But for me, I was also doing this as a consultant. So I was stepping away from these deals. So I would go in and sign agreements with the sellers, get the house where I had an equitable interest to market. Then I would go find the tenant buyers, underwrite them through my lenders and credit repair professionals. I had a whole bunch of hoops for them to jump through because I was trying to create a homeowner mindset. I wanted them to know they were buying this house, not renting this house. We went as far as to clear all the contract contingencies. We cleared title, rolled the asset into a land trust, and did a closing at an attorney's office. Now, it wasn't an actual transfer. Well, title transferred from the seller, the original seller, to the land trust. And then we made either the attorney or my company was the trustee on the trust, so they couldn't screw each other. And we basically babysat the deal through until it closed. And 95% of the time it did. The worst case scenario is people moved out and the places were fully rehabbed. Like we had one kid, he lost his job, and his girlfriend, fiance, in the same week, he'd put about $30,000 into a house that was only worth 100 grand. He put a significant amount of work into it, and he was just so devastated. He just walked away. So that's the worst case scenario I've ever had in a lease option because I underwrote correctly. I only dealt in certain asset classes and certain price points, and I only dealt with a certain type of buyer who had a buyer's mindset. If they had a renter's mindset, if they ever lied to me, they were done. Like it was like, get out of my way. You're done. Go rent from somebody. I'm not helping. So I can teach you more about that in the future. Owner financing is another great tool. As I told you earlier, 37% of sellers right now in this environment, 37% of homes are owner financeable because they're sitting there free and clear. So if somebody needs out, you can put creative deals together. You can, if the market is falling, you can, like, let's just say values do slip 10%. And you've got somebody who's a business owner who just got an SBA loan, they're going to be back on their feet. They've got strong cash flow. Their business is back up and running, but they can't get a loan right now. They took on SBA debt or they took on other debt. Their debt to income ratio is too high. They can't get a loan. They need to buy a house because they're spending more and more and more money on rent. They're spending 35 to 50% of their income on rent, and they could be spending 16% of their income on a house. What do you do? Well, there's 37% of houses sitting right now nationwide. 37% of them, you can put a deal together. If those sellers are concerned about getting the maximum amount of equity and prices are going down, you can show that seller how they can sell at yesterday's market value or at today's value before it drops any more. They can sell at a premium. We sell things on price or terms. Pick one. So you can help in a market like this where you don't have to worry about appraisals, where you have strong market economics, and this is a short-term effect of something else happening outside of everybody's control, not just speculation that has run the prices high. You can take that business owner, create financing for them by making the owner the lender, lock in that price today so the seller gets to sell out at what they thought was a fair valuation last week that is now lower. The buyer knows he's paying that, but he also knows that he's going to be in this house for more than 10 years. And having the privilege of buying a house with owner financing is better than spending 35 to 50% of his income on rent. So it's financially, he's willing to pay a premium price to make a long-term financial decision to benefit his family. So this is a time where things like that can be the difference when everyone else is sitting around twiddling their thumbs saying, no sellers are going to list. They just don't want to list. They're worried about prices. And you can say, listen, what if I can promise you this price today? I've got people lined up ready to buy this house, and I can show you the T12 from their businesses. They're educated business people who are also going through a tough time, but they will step up and they'll buy on terms right now if you're ready to go. And you can create sellers. You can create listing inventory. You can create wholesale deals out of thin air, and everyone else is looking saying, oh, there's nothing. There's just nothing out there. There aren't any deals. Nobody's moving. So owner financing is another one of those things. And you can do it with land contract, contract for deed. But, you simply, in a nutshell, you get an owner that's wanting to protect their price. They're willing to sell on terms and take their money over time. It stabilizes their equity. Think of it as an installment sale, Mr. Smith. So we're going to get you a down payment right now to protect you. And by the way, you're comfortable owning this asset today, right? Okay, I thought so. You've had it for 20 years. I just want to make sure you're still comfortable, because what this is going to look like is we're going to put a bunch of money in your pocket. We're going to record a first position mortgage against the house. And your worst case scenario is you have all that money in your pocket and you still own the house. Not so bad, is it? Okay, I didn't think so either. So you can sell this house at a premium. We can secure your investment. We'll make sure you're the first position lender. We're going to carry this at a higher than normal interest rate. So over time, you're actually going to make quite a bit more money. We're going to put us, let's just say it's a 7% rate on this. So at 7%, every 10 years, you double your money. The magic of compound interest, Mr. Seller. So in this environment where we know inflation is going to run high, don't you think that locking in every dollar of equity you can today before prices fall further and giving you protection against the hedge against inflation that's coming, don't you think that that's in your best interest right now? And don't you think that the last 3 realtors that were here that told you had no options, you better just sit still and wait a few weeks, don't you think that was bad advice? Here's the blue pen. So these are great tools that you can use when the market is refusing to move. You can make the market move. You can bring activity to the market. You can be the tip of the spear. And you're likely to see a scenario like this where buyers won't move, sellers won't move. The longer our market stays stalled, the more likely we are to see downward price correction. So things like this keep them moving forward. It keeps some momentum in the market. Now, unless a lot of people do it, it's not moving the needle that great for the market. But the more people that get educated and can think outside of the box and have creative solutions and offer real counsel, like be a real estate professional, the more of that we can get, the better we're all going to be throughout this whole thing. Lastly is raising private capital. So if you don't know that there's an entire industry, that a mortgage industry that happens under the radar, you should educate yourself on this. So private money funds probably close to 20% of deals in every market in the beginning. A lot of lenders don't have programs for really homes in really bad condition with a lot of deferred maintenance. Oftentimes, if people don't have cash, they'll use OPM or other people's money. And a lot of times that is private money. Sometimes it's hard money. Hard money is more established. It's usually from bigger funds and firms. That's going to come with anywhere from 2 to 4 points on the front for origination and anywhere from 8 to 12% monthly interest. Usually they're going to go up to an 80% LTV, and they'll do anywhere from a 3-month to a 12-month term. Very expensive money. Private money is usually relationship based. It's either 1 or 2 steps from you. It's in your circle of influence. Oftentimes you can get that with no points, and from 0 to 2 points, and you're going to see interest rates anywhere. I've seen as low as 6%, and I personally have a loan at 15%. Only to investors, only to people who are sophisticated, understand finance and understand their risk. I'm not predatory lending, but I have a certain standard for what I'm willing to tolerate. I need an 18% APY. And if I charge 1 point origination and 15% interest, then over the term, if annualized, last year I averaged 18.97% APY on my private notes. I mainly write to landlords, sometimes flippers. In this environment, landlords are way safer because we don't know what exactly it's going to look like selling a flip home right now until we see how buyers react and what unemployment is. But we know we already have a housing crisis and we need more rental inventory, an affordability crisis. So it's still safe to raise capital for landlords. It's still safe to loan capital to landlords. And what about when you represent a seller and they, like, especially in probate, this is where it's really unique. So the average probate inheritance in the United States is $177,000. So with that amount of cash in this environment, what do you do with it? You buy stocks because who knows? Like most people think that the Dow is going to find resistance at 15,000, even though it's bounced. A lot of people think that that's a dead cat bounce and that's going further down. So Mr. Seller, do you want to put that in the market and take that risk right now? What if I could show you a way to double your money every 4 years by loaning to me or one of my other real estate investors? And we'll go ahead. Same thing as the owner financing. Worst case scenario is you get the house that you already own and all the money that they've put into it, all the construction they've done. So we're going to secure your position on the title of the house, which you already own. You're gonna sell your house. You're gonna write a loan to a private mortgage to the guy that's buying it. You're gonna protect your investment in the house you just now sold, and he's gonna bring a whole bunch of money and a whole bunch of guys in here and fix this place up. And if he screws up, you get the house back, but it has a lot more equity in it. If he doesn't screw up, you're gonna make about an 18% APY, and at that rate, your money doubles every 3.8 years. Blue pen, right? So there's a lot of things we can do to create movement in the market when no one else is. These are some of the more, the things that I don't talk about a ton in probate, but in this environment, especially if we see the market freeze and stall, there's a lot of things we can do to keep it moving forward for ourselves, but also for the greater benefit of the market. Let's talk about how to prepare your business finances. So this is very important in this environment with the uncertainty. Until we know a few more things, you should have every single dollar that you can working for you. And you need to, you're going to have to tighten your belt, but you've got to be careful here. You've got to look, you've got to be quick to cut things, but don't cut the wrong things. Don't cut off your supply of, if you have leads in place that have been working and you've got a system and that's creating consistent revenue, the worst thing you could do is cut out those leads, because then you're killing all that momentum. So it's easy to cut costs. Knowing which ones to cut is more challenging. So you've got to look at this and say, what is my actual return on investment? Like, what has this done for me? And my advice to you is if you're not getting a 3-to-1 return on anything, including technology, like any software you have, any subscriptions you have, if you're not getting a 3-to-1 return in this environment, you need to scale back. Now, essential spending is going to have a different definition for each of us, but you've got to go through line by line, look at all your expenses, use a credit card statement if you don't have a P&L, but go through that and look and say, do I need this? Is this necessary or essential to keep the business running? Now be careful. Like I said, don't cut off your supply, because if you have leads coming in that have resulted in all the business and escrow and in your pipeline, and you cut that off, you've got a 90 to 120 day cash conversion cycle, even on motivated seller leads. But if you look at that and say, okay, I've got this lead source and then this lead source, and one is motivated sellers, the other is internet leads. Internet leads are going to have a 9 to 12 month cash conversion cycle. So that's something that you can cut now, because you're not going to be paid on those leads for another 9 to 12 months anyways. So when you're looking through this, say which of these leads have the fastest cash conversion cycle and the highest return on investment. Those are the things you have to save. You need that. Even though it's an expense, it's an essential expense that you need to keep on in your P&L. Because if you cut off your supply, you're going to starve if things do take longer to recover than we're expecting. So for every dollar you spend, look at how many dollars do I get in return. And my advice is you should always look for a 3-to-1 return, or you should cut and run and find something else to budget for that budget. I think we talked about all that. So tools, and I should have put essential tools here. I mean, look at the tools you have and which ones do you need? Like, do you absolutely have to have? We're going to look at this a little more in depth and operations tomorrow. But I mean, really, what do you need to run a real estate business these days? You need a phone, a laptop, a good database or CRM, some way to do video conferencing. That's kind of your essential tools that you need right now, and a bunch of books. You need a whole lot of audio books to teach you things. But you don't even need that. You just need to go to Bigger Pockets and listen to a podcast and learn what you can for free. But every dollar you spend, every dollar you save is critical right now, in my opinion. You want to be holding cash until there's more certainty in the market. And then I can offer some different guidance on and smart investments and things that you can do. But anything that's non-essential needs to be suspended, canceled, cut out, forgotten about, and get your cash flow in line. The healthier you are, the more, like, remember what I said, put your mask on first before you help others. And I mean the airline mask, not the COVID-19 N95 mask. But, make sure your cup is full and you're prepared first. So your personal finances, this is where it gets tough, guys, because this is where it hits us at home, right? It hits our lifestyle. We're stuck in home, feeling sorry for ourselves. Like, oh man, I really need to order that. Like, I'm just, I'm stuck here and I'm bored. And if I just had an Oculus Rift, it would be so much better. Life would just be so much more fun. Save your $400. Like, it's fun, but it's not essential right now if you want to be a business person. So you've got to tighten your belt at home too. And you may even have to limit the amount you pay yourself as we see what happens right now. Based on what I see in the current packages, they're leaving us out in the cold. If you're a single member LLC, a sole proprietor, or anything that if you don't have 2 employees on payroll paying payroll taxes, right now, unless they make some amendments, we're not getting bailed out. You're going to get money, but it's going to come off your tax return in 2021. So here's to hoping that, they're bailing out the top. They're going to inject capital in the bottom of the economy. Here's to hoping that all of us in the middle that keep things moving forward on a daily basis and aggressively expand and invest in this economy. Let's hope they don't forget us. But you need to prepare. You need to understand right now, there's no guarantee. So every dollar you save personally is a dollar available for your business. So the same as your P&L, go through your monthly expenses, credit card statements, bank accounts, whatever it is, and think about what is non-essential. If you're going to be at home 24 hours a day for the next 30 days, can you afford to turn off the security system and save that $30 a month? Can you bump your internet package down because you don't really need a terabyte of speed? Like, what are the things that, like anything, do you really need Netflix, Amazon Prime, HBO Now, and all those? Or can we get by with just watching Amazon Prime and paying one fee? Like, as a family, you've got to look at these things in the what if scenarios. And for every dollar you spend, that's a dollar that's not available to you whenever things break loose and you need that money the most. And I think it's safe to assume that you're not assume and prepare accordingly that you're not going to get bailed out. You're not going to get government stimulus. I think you will, and I think you'll be surprised. But if you've got the mindset that I'm going to cut expenses, I'm going to tighten my belt and make every dollar count so I can lead the way out of this, go ahead and make your cuts now. You can always sign back up for that stuff. When the government check comes, if you get $2,000 in the mail every month and you have a mortgage forbearance and you can save all that cash, my advice is save all that cash, reinvest into your business, and then sign up for all that stuff once that runs through the cash conversion cycle. Like, pull $100 out of your personal budget, put that $100 into your business budget, turn that 100 into 300 and give yourself 200 back and leave another 100 in there. So think like that. Like, that's the kind of mindset that you need right now. And then those household savings, like, consider investing those in education, coaching, mentorship, courses, any kind of books, anything that will help you not be bored at home, not think about all the bad things and all the closings you're not having and the deals you're not finding and the houses you can't show and the houses you can't look at and the ones you have under contract at the seller, like, you can't close right now. Forget all that. Focus those dollars, like, focus your savings and focus that energy on learning something new. Dig in, get on biggerpockets.com and go through the forums. You have literally over 1 million conversations to comb through over the last 14 years. There's a lot of stuff you got to read. So dig in, like, use stuff like that. You make your entertainment educational. Now, a recap on this. So we're coming into this with a really strong United States real estate market. And even though we're going to see an impact, I don't think it's going to look like the stock market. I think that we went through a deleveraging in 2008 through 11. The market broke loose, started to move. We responsibly moved off a lot of the distressed inventory, and we're able to pay back a lot of the money that the Fed was holding on their balance sheet. So we were in a much better position starting out. Now, a lot of levers were pulled, and we don't know what that looks like. So you're going to see an impact. It's probably going to be a short-term impact. It's probably going to be just as quick as we went down. You'll see that come up really quickly. It'll be more of a V pattern than like a long drawn out U, or even a longer, more painful L. You're probably going to, it's going to look more like a V. But the bottom of that V could still be 2 to 3 months. It's not going to be just one day. It just, everything skyrockets back to normal. So prepare. It is happening. Now, only you can decide if it's happening to you or it's happening for you. And if that, like what I mean by that, when you look at this and say, "Oh, this is happening to me. Woe is me. This guy depressed me, and my business is going to go to hell, and I don't know what's going to happen. Maybe I'll just go back to waiting tables," or BS. You can also look at this and say, "You know what? This woke my ass up. Like I was spending more money than I even knew. I haven't gone through my credit cards and my P&Ls for months. And that guy just inspired me to go do that stuff. I found $600 a month in non-essential spending. Right now, today, I'm going to go figure out a way to turn that $600 into $1,800 over here in my business, my LLC, my sole proprietorship. I'm excited to go out and find opportunities and stuff that I've never done before. It's like I just won the lottery. I've got $600. It's going to be $1,800 in the next 90 days. I don't know how, but I'm going to figure it out. Like, you need to be like, is this happening to you, or is it happening for you? Is there a benefit in this? Is this going to serve you, or is it you going to let it bring you down? And you got to make that choice. And I would say sooner the better. But one thing for sure, the people on this call and any other call with the most positive energy, the highest level of education, and has the most creative thinking capacity will thrive. And you'll have one of your best years you've ever had, because this market shift is going to shake out the weak. It's going to call our industry. It's going to get, there's going to be less people knocking on doors, less people sending mail, less people on the phones. There's going to be opportunity everywhere if you can keep your mind right and keep yourself in a good position and be the point of the spear. So be fast to cut non-essential costs, but be careful you don't cut off your life supply. And no matter the outcome, like I said, there's a massive silver lining in this. It's a unique nature, which made it come on quickly. And I expect that a recovery is not going to look like it did in 2008. There will be some impact. There is going to be high unemployment. So we're going to have to manage some things, and we're going to have to be a little more nimble and alert than we have been in the last few years. I would say that a lot of your peers, it's, the old college thing, look to your right, look to your left. One of you won't be here in 2 years. I think our industry is probably like that. I think that there's a lot of people who aren't going to be prepared for this. They're not going to have the skill set to really know what to do, or they're going to be waiting around until you take all their damn business, and they'll just starve out anyways. But the ones that are taking action, the ones that are educating themselves, you're probably going to have one of the best years you've ever had. All right, let's go to Q&A. So guys, I have not done this much on Zoom. I'm usually on GoToWebinar for webinars. So I'm going to stop my screen share. And what I'll do is I'll just unmute each of you. I don't know if many people are on here with video, if you've just called in. Let me scroll all the way back up through. Let's just use the comments. I don't see any hands up. Nobody. David Pinnell has his hand up. Hey, Dave, are you there?
Yeah, hey, I'm here.
Did you mean to have your hand up? Did you have a question?
No, just, the comments of, it goes back to, I just wanted to make a comment to people if they're listening. And that, all the things that we prepare for in this business, we always got to prepare for taking care of ourselves. That's what I wrote down the whole time you're talking. And they teach us in class in real estate licensing, and the people I talk to at the schools now to recruit, and they're worried about that brokers they're going to join. They're worried about how much they're going to get paid on their transactions. They're worried about the duty that they're going to serve to the public. But man, we just have to bring it back to how are we going to serve ourselves moving forward the next 90 days?
Yep.
How are we going to stay productive in the next 90 days that it's going to reflect the rest of the year?
Yep. Good. Nice. So David, for those of you who haven't saw the video with us, David is an absolute expert. I don't know, like, um, has found massive success in probate, and it's mainly because of his mindset and his tenacity. And there's a video, if you go to alltheleads.com and search in the top right, search PANNELL, you'll find the video that David and I did back in, I think, was that in July, Dave? It's been
Yeah, it's
almost
almost due for
a
another
year.
year.
Yeah, and so you can get to know Dave a little better and get to know his business. He's very, very generous in sharing and letting everybody kind of look behind the curtain. And then we talked. I don't know when it was, Dave. Maybe like Friday night or Saturday night. We talked, and we're gonna do some stuff. So Dave and I are gonna do another interview for you guys. It's been quite a dynamic environment, and he's been having babies, and his wife's been, I guess that they have had a baby. But we'll set a time to do that. So you guys can expect, thank you for being here, Dave. And you guys can expect to, we'll take some of the more successful people and what they're doing, and people that already have some of these things in place. Like Dave's already made moves. He had the foresight to see that there is opportunity coming, and he's kind of retooling his team to take advantage of the short sales and foreclosures that are going to come through. Now, we may have to wait a little longer than we expected. We'll see what comes through in the stimulus, but those are the things, the conversations we want, and Dave was generous enough to call me and offer. I mean, we want to be transparent and give you guys, maybe we'll do it live, Dave, and actually just do it here on one of our days. But
That
so
sounds
everybody can kind of get an idea of, what Dave would do versus what I would do versus what somebody else would do. And maybe we do it as a panel. We'll get a few guys on here and say, all right, what are you seeing? What are you doing? What's next? So, all right. Well, Dave, I'm going to mute you. Actually, I won't. You're not causing any noise. So Jim said, I'm here loud and clear. Thanks, guys. Milo. Let me see if I can find you, Milo. Okay, so Milo's Machine asked the question. It said, I fully respect the aspects of homeownership affordability. How does the mindset of Gen Z to not own a home affect the market? It would appear as if a rental mindset was already in place before our current economic situation. And it was quite a few minutes later. And so what I would say to that, I mean, every generation is like, it's interesting, the baby boomers, we expected them to die 20 years ago and to go into retirement and admit they were old. And that didn't really happen either, did it? These are the people who are out, drinking beer on the golf course and living it up. They're looking for lifestyle. They're not looking to retire and dry up. They're selling their homes and renting. And I don't think any generation ever behave the way you think they should. It's culturally, the world evolves. But as far as Gen Z, I mean, eventually people will settle down and they'll look to buy a home. And with interest rates coming down the way they have, it's getting more and more attractive. And with rental rates going to the moon, it's getting less and less attractive to be in a rental. So the market itself, it'll create the demand. Um, I just got a notice that hey, Kat, can you hear me okay?
Yeah, I hear you fine.
No, Zoom just sent me a notice that my internet connection was down. Okay, just checking. But anyways, I think that I'll give you guys a couple books. There's two books, and we can drop a link to these. One is called Upside, and I can't quite remember the subtitle, but it was published in 2019. The name of the book is Upside, and it's demographics. The other is Big Shifts Ahead. How appropriate is that now? Big Shifts Ahead is the other one. Both of those are demographics books that were published in 2019. They heavily lean towards real estate analysis. One does it from a generational standpoint where they track each generation and how that's affecting different markets, including real estate. The other does it from a geographic standpoint, and they look at how certain demographics are behaving within certain regions and how that affects markets, including real estate. So if you're interested in learning more about that and kind of setting your mind on what to expect in the future of real estate from a supply demand standpoint, I would encourage you to read both of those books. I got equal value from both. Normally, I would only read, I would read two and recommend one, but I really do think there's equal value in both. So big shifts ahead and upside. And if anyone can share a link, I don't want to put you through my Amazon search right now, but that would be my advice. So Milo's machine also said, I recommend social distancing from social media and the fourth estate. The fear and frenzy currently in place can largely be attributed to the media. Stay informed, question what you read, and do not overconsume. Yeah, I think that's all good advice. Social distancing on social media.
And one comment, Chad, is just to have social confidence. Go
Yeah,
out there and have confidence in what you're doing. I mean, this is a crazy time, and it could be crazy if you don't handle yourself and just feed into everybody else.
that's right. And I'll tell you, man, I told you I was on mastermind calls literally every night. I have spent more time this week coaching than I have in a long time. And it's not anything that I'm being paid for. I've advertised. It's just guys who legitimately need help because, they've got 10, $15 million of real estate on a balance sheet and none of their rents are coming in and their lender's calling them and they're sitting on the phones for hours waiting to talk to their lender. And there's just so much uncertainty and most guys are good. They're cool. They know that these times come and they've been through them before, but we all have a breaking point, right? Like when you read just another damn article and it just sounds like 10 times worse than the last one. And then you see another news report and it's like, oh, Pelosi this and this guy that. And it's the more you put in, you have to control the flow of that. And we have to look in times like this. I'll tell you, I had not looked at a news website, a news channel, or anything news related, anything media related. I had not looked at since the second week of June until last week. And it is amazing the amount of toxicity it let back into my life just by looking at the news once a day. It's poison. So, but you've got to be informed in times like these and you need to understand what's going on. So I didn't have an option. I had to start looking. But for the most part, before I looked at anything like CNN or Fox or anything else, I try to go to the source. I look at the WHO stats. I look at the CDC stats. I look at like small business website and the Federal Reserve website and try to do independent research. And don't try not to be too influenced by other people's opinions. Like Milo said, and like Dave backed up, like your mindset, having a positive mindset is critically important. So be careful what you put in. Chris had a question about a HELOC. Chris, let me see if I can find you here. All right. So there's two Chris's. I've got CW Buy Houses. Chris, are you there?
I am here, yes.
Did you have the question about the HELOC?
I did, yes.
Okay, perfect. All right. Why don't you ask it out loud so everybody can hear? What's your situation?
I have a bunch of equity in a property that I own. Concerned that the values, like you mentioned, could potentially go down. So before that happens, I was thinking about pulling out my equity in case the values dip, and then I wouldn't be able to pull out later.
How long
So
How long do you plan on owning that home?
8 more years.
Yeah. And what's your LTV on it right now? Or do you have any debt?
I do. It's 80% finished.
It's still at 80%?
Yeah.
So you might not be able to get a HELOC. Some regional banks and community banks or credit unions will let you go to a 90 LTV. If you have at least I think it's a 750 credit score requirement, they'll let you go to a 90 LTV. And oftentimes, especially in this environment, it's going to be based on an AVM or an automated appraisal. So a lot of times those end up coming in high. So you might be able to get a little bit, but if you're already at 80% loan to value, there's probably not a whole lot you can get out. But yeah, my advice is, as long as are you an investor or brokerage or both?
Both.
Yeah. I mean, as long as you have the skill set to make a higher return, like I swept all of my lines of credit last week because in 2008, most of the guys that I had really a big challenge with getting them closed, it was because lines of credit was frozen. And with as much movement as there was behind the scenes and in the overnight markets, my worry was that the banks would actually freeze lines of credit. And that's still a concern. As we stabilize, they can, depending on what it looks like when they come out the other side and things settle down and they assess their own position, there's still a likelihood that there may be a temporary freeze or call on lines of credit. So I struggled with this. I put this all in place 3 years ago because I saw the debt bubble forming. So I sold real estate. I moved that into cash or into syndications. And I started to put lines of credit in place. I have business lines of credit. I have home equity lines of credit. The home equity lines those are typically like prime plus 1.25. So I think I swept money at 4.25 last week. My business lines they were like 7.25, I think is what I swept those at. But I looked at it and I'm like, all right, having $100,000 worth of dry powder at $503 a month is a lot better. And it was part of my strategy. You said you've got equity in these things. If there's ever a moment where you can buy when there's blood in the streets, you're going to sweep these lines of credit and use that cash because you have the skill set to get more than the blended rate on that is, let's just say it's 5%. So I just know that I have to make more than a 5% yield, but historically I carry about an 18% yield on real estate investment. So, I mean, my advice is get as much dry powder as you can. I would, as long as your overall debt situation you're not in a super high amount of debt, you're better off having cash in hand than you are equity in a home.
Perfect. Thank you.
Yep. All right. Next we had Alex. Cool. David, this question's for you, man. Alex, I'm going to try to unmute you so we can have a conversation. All right. Alex, you there?
I am. Can you hear me?
Yeah. Is this Alexandre?
It is.
Hey, man. How are you?
I'm doing good. How you doing?
Good. Dave Pinnell, Alex asked, how is David attacking probate leads right now? Now, Alex, do you mean today, this week, or in the last month or so?
Like in the last, 7 days, obviously just with everything's changing so fast, but yeah, just like within the last, like right now, what's the mindset, what's the, mentality as far as just with everything going on?
Hey, good. That's a great question, Alex. Nothing changes. In probate, you're going to find that you're not going to get deals today. You're not going to, you are going to get those immediate deals, but most of your stuff you're doing is planting seeds. We know now that prospecting these probates for over 1.5 years now, and we failed for the first 10 months because we were trying to do the wrong thing. There's 3 types of probate leads in here. And when you identify that, and we have by the ones that we purchased and the ones that we listed and the ones that we didn't get. So you have the first version of the probate is if it's a spouse, it's something very emotional, and they're probably not going to sell a house or make a move for a year, 3 years. So we don't even call them anymore because it's so emotional driven that we're getting, those are those most angry phone calls. And then we're not getting anywhere with the conversation in the beginning. So they are strictly a male list, and they reach out to us as a a CMA lead, a value operation type of lead. We're not even mentioning probate with them because the conversation is completely different. Number two is the family member, the brother, daughter, the son, somebody that's really related to that person that has passed away. They have real estate on their mind they have to evaluate and sell, but they still have to go through the grieving process of 6 months to a year. We're finding that most of those are about 10 months. So we're going to we're going to try to get the appointment like we've been taught from Chad, but it's not that important.
Yeah.
The third one is when it's completely unrelated or they have no emotional attachment to the property. When they just have to deal with the probate and have to liquidate the asset. Those are the ones, the 1/3 of the whole list that you have to find. And you're going to find those in the ones that have a different last name, have a different mailing address, out of state lead. Those are the ones that we're hammering, trying to get on the phone. And we're going to call them as much as we can to get a hold of them and to get a packet out to them and get in front of them and to get our value in front of them and then get that appointment eventually too, as Chad teaches.
And hey, how about the iBuyers being suspended in your market right now?
Exactly. Good point. So I didn't have this information before, and it's the same thing as an expired lead or a for sale by owner lead. There's a process and there's a type of lead and there's a conversation that has to happen and there's conditions and there's objections that have to be handled. Once you discover that, and now I'm coming from such an educational standpoint on this that it's fun to prospect them because I know when I call that type of person, that 1/3, we're having a good educational discussion about comps, value, and when can I buy your house from you or list it. That's if you just take that little bit of information, you're gonna go out there, you're gonna buy the list from Chad, and you're gonna be more successful than anybody else hammering the phones.
Yep.
Gotcha. Interesting. Okay. Thank you.
Awesome. Are you inspired, Alex?
I am inspired. Yes, I am. And I literally yesterday just ordered from you guys I sent out that special letter with the current conditions to October leads.
Yeah.
So,
Cool.
Yeah.
Awesome, man. Thanks for being here, Alex.
Yeah.
All right. Next up, we have Laura Gray, who's asking a question. Let me see if Laura's still on with us. David Scott Hale said, what was the third one? Different last name, out of state, and what? I think it was motivated sellers, Scott. Like the people who are really, really motivated to go now.
Yeah, you're going to find that those people are going to be detached from the emotional state of what they're going through. They're going to be faster to make a decision from the probate court date.
Yeah.
Everybody has to file, not everybody has to file probate. If they're in agreements, that there's other ways in Texas that we're dealing with it, but let's just say everybody has to go through court. Everybody has to meet the judge and say, yes, this is blah, blah, blah. Let's say they have to say that step, but they're going to be so detached from that property or they're going to be so overwhelmed that when I'm calling them for the 7 months that it takes or the 6 months, and I'm following up with good letters and good information from real estate, they're going to at least reach out to me and give me an at-bat.
Yep.
And when I get in front of them, that's when we're going to, we're seeing 80% conversions, the ones that we did last year and going into this year.
All right. Now you're just bragging, smartass.
I know. Sorry. It's fun though, but it took
No,
a year and a half to get there
awesome.
though.
So
It
if
took
you
a year and a
guys
half to get
if you
there.
guys are finding value in what David's saying and you haven't seen that video that we did, please go look at that. I mean, it's been almost a year ago. And I would say your business is 80% more innovative than it was at that time too, right? Like you've continued to change and evolve and do a better job. And that's the name of the game. Like just like being empathetic, looking at it the way David's saying, and you can have those kind of results. So what do you think you're on track to do in the next 12 months? 100 and how many closings and just that niche?
I wish I could tell you, to be honest with you. I think it's going to be a major dip this year just because it didn't start off as So in our business last year, January, we had 22 deals under contract.
Yeah.
We're only operating with about 14 closings, and that's honest. That's the honest truth. I'm not some superhero. And then when this thing hit in March, the end of the first quarter, going into the second quarter, we'll just have to see how it works out. But I'm definitely going to stay on the phones and prospect,
Yeah.
and we're definitely keeping things rolling. But man, we'll talk. We'll talk in a few months and see. But I'm not gonna take a negative viewpoint. This is the best thing that could happen to you if you're looking to buy houses and invest and be a good real estate agent and be super professional with these people.
Yeah. Well, I'll just put the number there for you. It's 175. Go get to work.
Okay. Yeah.
All right. We've got Laura Gray. You are on the air. How are you, Laura?
Very well. How are you doing?
Doing good. How can we help you today?
Okay, I've got a family that got two leads, probate leads from one of them, the elderly lady, and the son, the surviving son, wants to buy out his sibling sister. I'm thinking, okay, how can I make some money in that? If they've already identified that that's what they're going to do.
Yep. Has the son applied for financing?
Don't know that yet.
So oftentimes people who want to buy out the estate, they haven't thought it through. They don't really understand real estate that much. And in my experience, a lot of times like, oh, no, like that cousin Jerry's going to buy it. And I'm like, great. So let me help you there. And I'll continue providing value and asking questions. I'll get cousin Jerry over to my mortgage broker, so I have some control in the deal. And the mortgage broker calls me and says, cousin Jerry has like a 440 credit score. He's not buying anything. So then you've provided value to the family by letting them know that cousin Jerry was going to waste their time and didn't have the wherewithal to close. You've given cousin Jerry, like, he's got a realistic look at what his options are, and he can accept that and move on and get his inheritance distribution instead of getting the property. And oftentimes you'll end up being a listing agent. Now, let's assume the brother does qualify. The way that you can, one of the things that a lot of people overlook, and, when they think realtors just put signs in yards and make their Lexus payments, like, we absorb a lot of liability from an individual transaction, right? A party to party. So if you can have a limited service, a buyer's agency agreement with the brother, or you could do it as on the listing side, but your role in the transaction could be simply making sure that a proper contract is written with proper timelines that correspond with the probate timelines, and that you see it through closing. So whether that's I don't know what they'll tolerate. You might make $1,000, you might make $5,000, but you could offer them, say, listen, why don't you guys let me use my expertise and my knowledge of Virginia contract law? I will protect you, and if anything would happen to go sideways, just understand, I'll be an intermediary, and we'll see our way through it. But you guys won't have to find yourselves making mistakes, creating liability that you're not even aware of until it's too late. So how does $1,000 sound? Is that fair? 500 from each side on the closing statement. Cool. Let's write this contract. Here's the blue pen.
Okay. Let me follow up. Do you think, this is in Florida, by the way, do you think a probate judge will require some evidence of marketing to show that whatever the agreed upon price, if in the event that the son does purchase
No, Florida's pretty easy. I mean, I've seen stuff go for 50 cents on the dollar on one-page investor contracts. They stamp it and send it along. They're pretty reasonable. And I mean, if you have a family member offering to buy, they may ask, how did you establish value? And the brother may say, well, I have X number of dollars. That's what I can afford. So that's what I offered her. And I think a judge, in my opinion, is going to look at that as, is this in the best interest of the family, keeping it, keeping an asset in the family. And I mean, unless he's absolutely, if the house is worth 200, he offered his sister 25 and she has mental illness, a judge shouldn't intervene if it's a fair deal.
Okay. Fair enough. Good. Thank you. Appreciate your answer.
Yeah. Thank you, Laura. All right, guys. That's that one. Scott, thank you for your comments, sir. Colette is asking, can you send out a link to the David Pinnell video? Can you please include that in the recap?
Yep, will do.
Enzi, where have you been? I haven't talked to you in ages. I appreciate your kind words. I really, really do. It means a lot to me to know that you guys get value from this. We do have an empty queue. Belinda, let me see what yours was. So Belinda, right now, what we understand, there's only a small handful of counties that we're not going to have lead deliveries for the current month. Maryland is not a problem, and so I don't see a problem for you getting your leads. You should be good to go. There's only a handful of markets right now that really just kind of lock down the courthouses and won't allow access. Most are allowing restricted access, so we can still get researchers in. All right, guys. Well, we're right at the 2-hour mark. I'm going to let you guys get back to work. I'll try my best at the Jim Sullivan close. I want you to take one thing you heard here today, one thing that inspired you, go put it into action and come back. We'll be right here at the same time on Friday. Mastermind call tomorrow, Thursday at 1 p.m. Eastern. The next one of these calls, the next shift call, will be Friday at 12 p.m. Eastern. And we'll probably run an hour to two, the same as we did today. So thank you guys so much for being here. Make it a great day.